Hello, and welcome to episode 6
of Mo Money.
the investing show for millennials by a millennial. Happy March. What a fantastic ending we had for the month of February in the market. After hitting a low on February 11th of 1810, dating back to levels not seen since April 2014, the market rallied over 6%, led by some stabilization of oil prices and a decrease in the talk of rate hike. In this volatile market, not as bad as expected news is the new good news. But like I said before, no better time than now to start investing. Hopefully you followed my commandments from last episode, did a little homework, and you bought a stock. Fantastic. If not, what are you waiting for? After reviewing my episodes, I realized I mentioned diversification a lot, but I never really go into exactly what diversification entails within a portfolio. You're not idiots. You can guess what it means. Unless I show you exactly what a diversified portfolio looks like, you'll never truly understand what I mean when I say diversification. Now, I contemplated ways to do this. I thought of going with the old garden analogy, spreading seed, you have a beautiful garden, or not putting all your eggs in one basket, but all those are boring as fuck. So I decided to teach you how to properly diversify using the classic 2006 teen romance film, John Tucker Must Die, starring Jesse Metcalfe in a film full of hotties like Ashanti, and some other girls. Anyways, back to diversification. John Tucker was like goddamn risk management king, the Buffett of babes, the Oracle of Forest Hills High. He knew talking to girls from the same cliques, sectors, would result in everything blowing up in his face and being left with no babes. I made the mistake of talking to girls who were friends in high school, and that shit blew up in my face badly. In the movie, he was dating the activist vegan girl, the head cheerleader, and the overachiever. If the movie had been a little bit longer, he probably would have dated a burnout, the athletic chick, maybe even a teacher. How he did it, I have no idea. Dating one girl at a time is so time consuming and drives me absolutely nuts. He is John Tucker, the man. How does this relate to investing? I'm sure you're asking yourself. Well, think of the stock market as a giant high school full of kids. Okay, there are about 4,000 plus actively traded stocks on the New York Stock Exchange and the NASDAQ. So let's say this is stock market high school. And the school is divided up into 10 sectors or cliques. And within each clique, there are sub-cliques. In the stock market, sub-cliques are referred to as industries. So examples of sectors: financials, energy, healthcare, industrials, basic materials, consumer staples, utilities. Examples of industries: in finance, you have banks, insurance companies, real estate. Industry and healthcares, you have biotech, pharmaceuticals. Industry and consumers, you have food, household product, beverages. So think of high school. You have the jock clique, and then you have the sub-cliques. You have the football players, you have the soccer guys, you have the nerds, drama, speech, and debate, chess club, the geeks, the comic book club, AV club. People are going to be mad at me for calling them nerds. Sorry, but you get the point, okay? John Tucker dated a girl from each clique, and he wanted to make sure he didn't get caught. This is how you diversify, manage your risk, and protect your downside. If one sector goes down, don't worry, because you have the other ones that are propping up your portfolio if one sector is going through a time of turmoil and volatility. Now, when it comes to diversifying, always make sure you are equally weighted in all sectors. Let's say you have 5 stocks. You should divide that up by 100%, 20, 20, 20 in each sector. 10 stocks, and you have 10% in each. As for now, I'm suggesting you buy strictly U.S. equities and ETFs that are tracking U.S. equity. Okay, you're young, no need for bonds. I would suggest staying away from buying foreign stocks or ETFs. Back to John Tucker. He had to pick the hottest girl from each clique, aka the hottest stock from each sector. Let's start with financials. They bankroll America's growth. I'd suggest buying J.P. Morgan. Jamie Dimon, the CEO, is a genius. Maybe you pick up an industrial, the sector that fuels America. General Electric, Honeywell, or even Waste Management. All great stocks, all stocks that also pay a great dividend. Then you have consumer discretionary. People are saving money at the pump and spending it elsewhere. Where are you spending your money? Starbucks, they're growing. Chipotle, slight setback, but I still see people there, and I know people still love to eat Chipotle. Are you drinking Coke? I love it. Also, a long time Warren Buffett, Berkshire Hathaway favorite. Next, let's jump over to technology. You have a phone? Is it an iPhone? Buy some Apple stock. Who's your service provider? Verizon? Buy that stock. Or even T-Mobile, who was once a joke, now a force to be reckoned with thanks to their incredible CEO, John Legere. He is an animal. It's not hard picking stocks as long as you think. Just go with what you know, do your homework, and invest. Now, there is a way to diversify in sectors without buying individual companies. And that way is to buy ETFs. They trade like stocks and mirror a certain index. So say you feel that healthcare companies are going to do well. You don't know which company though. If you buy a healthcare sector ETF, you can participate in the success or the failure of that sector without being being exposed to just one company. It's sort of like double diversification. You can also diversify by buying an S&P 500 ETF. This will mirror the performance of the S&P 500, which is one of the best indexes for valuing the stock market. This covers all sectors, could be a good anchor for your portfolio. Kramer does this awesome, super exciting segment, the second best segment on Mad Money behind. He has callers call in, he decides if they're diversified. So allow me to give you an example of a perfectly diversified portfolio. JP Morgan, Starbucks, Honeywell, Verizon, ExxonMobil. Let's throw in an S&P 500 index fund. This, ladies and gentlemen, is a perfectly diversified portfolio. It is important to own a diversified portfolio such as this. It is a fail-safe method that has worked since the beginning of investing time. Now take, for instance, Hillary Clinton's speech back in 2015 about healthcare companies who are fucking monsters. I'm talking to you, Pfizer. I'm talking to you, Gilead. Anyways, she made a speech condemning the entire sector. That entire sector fell more than 5%. OPEC, oil cartel, decided to not cut production, sending oil prices from as high as $120 down to $35 a barrel in 2 years. Every energy stock gotten crushed, whether you own the best or you own the worst. This is why you want to be diversified, to protect yourself. Remember, if you flirt all the girls on the cheerleading squad, it's going to blow up in your face. When you're buying stocks, think like John Tucker. Is this stock related too closely to any of the stocks within my portfolio? If so, think twice about buying that stock. I'm not saying don't buy two tech stocks, two consumer stocks, two energy stocks. I'm saying don't own a portfolio entirely full of stocks from one sector. Throughout the movie, the John Tucker analogy, it kind of falls apart. Okay, as he ditches his diversification plan and he goes all in one girl, that blows up in his face. So my analogy holds strong. Don't go all in on one sector or in one stock, or you'll end up in a world of pain and you'll have no Ashanti, which is the worst mistake that you can ever make. Thank you for watching another episode of Mo Money. Hope you're enjoying watching and learning from the show as much as I am hosting. Okay, I appreciate everyone who's reached out in support of what I'm doing, and I'm happy to all those who have reached out for advice to help them further themselves in the investment world. That's what I'm here to do, to help grow our generation to a strong, educated, and powerful generation that will change the world. Unlike what those doo-doo heads on CNBC say about millennials, yeah, I bet you thought that we weren't watching, but I am. I do not appreciate those condescending wisecracks, not gonna mention any names. Anyways, we'll be back next Friday, same time, same place. For now, subscribe, like, comment, and share. Follow me on Twitter, like us on Facebook. Mo Money, signing out.
I'm still talking about them chickens in the wall.